So, Alan, we've had numbers today from BP. The oil major has often given investors reason to be wary of its results. What's BP told us today?
It's what they didn't say, actually, which is very nice. There was no shock warning in itself, kind of a shock. We've had early warnings from Shell and BG, which really surprised the market. They were negative. BP actually hit their targets, at least at the net level.
And what does this then tell us about where BP's headed next? What's it said about its plans for the next year?
They are concerned what shareholders think. Everybody will be glad to hear that. But the group of major oil companies is concerned that shareholders are worried about how they're spending the money. Capital spending in general is being, I don't want to say it's being cut, but it's being reined in. And growth rates across the major oil companies for 2014 looks like it's going to be below 3% for upstream capex. The operating cash flow estimates, though, overall, seem to be prepared to grow faster than that, probably double digit, which is interesting. But what are they going to do with that money?
So there's the question then, if the cash flow, if the income is going up, but the capital spending is going down, it suggests there'll be some spare cash resources in the sector. What might they use that for?
Well, I think they could use it for more share buybacks. That's what BP's been doing with extra money that it has from asset divestitures. Certainly dividends have been steadily rising for the sector. It's quite a defensive sector, the bigger companies, as we talked about before with Shell. The thing is that I think at some point oil investors, those who are truly interested in the sector for growth, are going to wonder, what are they doing with this money? Because if they're just giving it back to us, then they may not be putting enough of it to work to grow their portfolio. So it's a balance. Right now, the investors really want to see, or apparently really want to see, better returns. But it's possible at some point they're compromising the potential for growth.
Well, and it sounds like there's an opportunity for some oil companies to really perhaps differentiate themselves by investing for growth, whilst others are more committed to shareholder returns. Alan, thank you very much.
Thank you.